the day with a gain of 4% too. A lot of these consumption names have been moving. We spoke about Page Industries and PVR too. So we'll watch out for these stocks. But right now, the stock on our radar right now is JMC Projects, won an order worth nearly 700 crores. In addition to that, they have a board meeting scheduled today to raise or to mull fundraising options. Mr. Manoj Tulsian, the whole-time director and CFO of the company, joins in now. First up, Mr. Tulsian, the order that you won, what does that take your order book to, and how long or how much time does this order get executed in?
Morning, Nigel. So with the 700 crores of order, in the June end, we will be close to around 7,000 crores of order book. And most of these orders, this is a mix of some water pipeline orders and some commercial orders. So water pipeline orders normally it takes around 2 years to complete, and the commercial orders would be anything between 2 to 2.5 years.
All right, Mr. Tulsian, thanks so much, sir, for joining in today. Could you give us a sense of margins on both these, these commercial orders as well as the water pipeline orders? Which one is more margin accretive? If you could give us a sense, sir, about that.
So if you really see in the last 3-4 years, we have been able to improve our margin profile. Last year, we had a margin of around 9.5%. And as a strategy, we have been very cautious and careful in picking up the orders and in our tendering process. So most of these orders would be in that range only.
All right. Mr. Tulsian, additionally, you also have the board meeting today to consider fundraising. Earlier, you had said you are looking at raising some sort of fund. So if you could tell us what exactly is the quantum you're looking to raise, whether it will be via debt, equity, what sort of dilution are we expecting?
No, this is purely a debt fund. We are today, of course, after the board meeting only, we will be able to discuss much.
The quantum of that, approximately?
Well, we are looking at a maximum of 150 odd crores.
Okay.
And this is primarily towards, funding our capex requirement in the next 2 to 3 years. Because we have been investing in our business every year to the extent of anything between 70 to 80 crores. So, we feel that the fund market today is good, lucrative, and going forward, possibly there might be some hardening. So, we are just looking to tie up some funds.
All right, Mr. Tulsian, so you're not going to be diluting any your equity base. That's the picture that you're giving us, right?
No.
Okay, all right. Mr. Tulsian, the last time you joined us, you were talking about, we had put this question forward to you that you were looking at exiting BoT projects, if I'm not mistaken. I think you had 3 or 4 in the pipeline. Any movement over there, if you could give us a sense of that? And also, what's the current debt on your books, sir?
So, Nigel, we have been working on that, and as I had mentioned last time also, that as and when something happens, of course, it will come into the public domain.
Correct.
Rightfully so. So, we are still working on that.
Okay.
And in terms of debt, we have a debt of approximately around 1,400 crores for these BoT projects.
Okay.
And around 650 odd crores on my standalone, so a consolidated debt of around 2,000 crores.
All right. So, Mr. Tulsian, if you could give us a sense of those 4 BoT projects, they have a debt of around 1,400 crores, and the valuation you'll be looking at is 1,400 crores, or do you think there is some equity value as well there?
No, so if you look at the total book, it is 2,000 crores, 1,400 crore of debt and 600 crore of equity.
Okay.
Right?
Yeah.
And anything beyond that to comment at this point of time would not be fair.
And how much do these projects contribute in terms of revenues?
In terms of revenue,
percentage?
Right now they contribute only around 8%.
Oh, okay. Any internal target that you have in terms of monetizing these BoT projects? You said you are in the works, but any internal target that you have by the end of FY18 maybe, or the first half or something of that sort?
Look, if you really see in these BoT projects, a couple of our projects which are actually high value projects, they are having a concession period of around 28-29 years, right? Okay. So whatever we see today at this point of time is more of cash flow mismatch.
Okay.
Because our debt repayments, everything is scheduled in the next 12 to 13 years.
All right.
Right, so it's basically a cash mismatch. So we are not desperate, to go to the market and just sell off.
Super. Okay. All right.
So we are looking for the right partner who can really nurture these assets the way we have been able to do it in the last 3-4 years.
Okay.
and look at the different partnerships if possible for expansion of this portfolio also.
All right, Mr. Tulsian, thanks a lot for joining in and giving us all those details. With that, it's time now for